Are the EU's moves towards roots-up reform of the banking system enough to prevent another financial crisis in Europe, to support regulation on one hand and lending on the other so jobs and growth can be created? One man well placed to answer those questions is Gunnar Hökmark, Swedish centre-right politician steering binding European Commission proposals of structural reform of the banking sector through Parliament. Mr. Hökmark is an advocate of regulation, but not such that it strangles lending. Let's set the table first. What, at the beginning of taking on this file, you wanted to achieve and why was it necessary?
For me, the most important thing was to facilitate more of financing, investing in Europe. And the banks are crucial actors.
And briefly, was there an aspect that taxpayers ought to be protected from the bailouts of banks that were deemed too big to fail?
Yes, you could say that, but that nowadays it is very clear that the shareholders and the main investors will pay the price if the bank is losing.
Okay, let's turn to our first question, and here it is.
Don't you think that without government safety net, excessive risk-taking will disappear simply because instead of relying on the taxpayer, the bank managers and the traders would risk their own head and money in case of failure?
I agree very much with that, and that's why we have finalized another legislation that is called the Banking and Recovery Resolution Directive, which means that in any bank, big or small, they need to finance their own losses. So if a bank turns into big problems, then the shareholders will lose, the main investors will lose, in order to secure that everyone will know where the responsibility is. So it's some sort of revival of capitalism where the capitalists will have the full burden and the full responsibility, not only to the profits but also to the losses.
And will that reduce risk? You know, what many people fear is systemic risk.
Systemic risk, yes. Risks not, because we need to take risks. The whole idea of investments are to take risks. I want us to facilitate more risk-taking, but in a way that is transparent and that you can analyze the risk and distribute it.
Let's move on to the second question.
Try to encourage companies to finance themselves more through the capital markets. And on the other side, we try also to separate trading activities of the banking sector from the common intermediation activity, knowing that this separation could limit the trading activity, and this limitation could also limit the liquidity of financial market or capital market. And this could be maybe a problem for the financing of the private sector that we try to encourage.
This is at the heart of your file, isn't it? This separation of...
You can say, and that's why I'm not supporting to have a separation as such, because we need trading, and trading is not, just because it's trading, it's not more risky than lending. Sometimes lending can be the most risky thing, and sometimes you find risks in some sort of trading. And in Europe, the banks are dominant in the capital markets. That is quite good, because the banks are well regulated, they are quite secure, we have a good supervision. But what we are trying to do, and what I'm trying to do, is to say that if a bank is having too high level of trading, and if that trading can be assessed as more risky than normal trading, then the supervisors, the competent authorities, need to take a look closer and tell them, maybe you need more capital to be more safe. Maybe you need to reduce that activity, or maybe we need to have a more forceful supervision of your daily activities, or maybe you need to separate it from your other activities.
Okay, let's go to our final question now, and here it is.
The financial lobby has been very strong in creating loopholes. Strong regulation is simple regulation. That's why I wonder if it's not more efficient to have a clear separation between savings banks and investment banks.
That is very true. Strong regulation is simple regulation, but you also need to be sure what you want. I don't want us to reduce investment making and market making and the financing of European enterprises and European new jobs. I want that to be done in an efficient way, not to be decreased but to be increased. And banks are crucial for that. And what we have seen through the crisis is that the banks that are doing both tend to be more stable, more resilient to the crisis, while those who are specialized, the savings banks on the one side and the investment banks like Lehman Brothers on the other side. But what is called the universal banks, they are standing on three different legs, and they are more resilient in a crisis. That was what all authorities have seen, and what we also have seen in the stress tests.
Okay, Gunnar Hökmark, thank you very much indeed, appreciate it.
Thank you very much.